Welcome back. Let's focus on Senco Gold. The stock is down close to around 18%. To help us out with what went wrong in the past quarter, was there any one-off and what's the way ahead? We're joined by Mr. Suvankar Sen, the MD and the CEO of the company. Hi, Mr. Sen. Good morning. Good to see you. Well, the big problem point has been your gross margins, which have seen a sharp reduction. But in the past quarter, there were a couple of one-offs, I believe. So first, let's quantify them. There was a custom duty impact. There's a hedging loss as well. Quantify both these two, and X of that, what would your margins look like?
So see, if we look at the overall 9 months numbers, you will see that the adjusted EBITDA, because there has been a 58 crore impact due to the customs duty, which has led to a particular loss, leading to a lower EBITDA. And along with that, what we have seen is that the stud ratio, because diamond jewelry sales in the overall jewelry sales have not grown to that extent as the overall. So while the top line has been amazing, we have grown by almost 20% from 4,200 to 5,200 crores. But because of hedging loss and the customs duty, the impact has been 70 crores in the Q3. So in Q3, compared to the Q3 of last year, when you compare the numbers, the EBITDA percentages look much lower, from 11.5% to 5.5–6%. But if you look at the 9 months, it is going to be normalized, and we are quite confident that when we go to Q4, we are already looking and seeing that the diamond jewelry sales have picked up, the stud ratio is improving, and the impact of duty cut has already been taken in Q2 and Q3. So Q4 will not have any impact on duty cut. Things will be back to normal, and we will continue towards an EBITDA of close to 7% and the top line growth of 18 to 20% year on year. So things will fall in place, and the hedging loss, the movement of gold price, the duty cut, all the the challenges and the losses that have been there have been taken into account, and things will get back to normal.
So 3 points you're making. One is the customs duty and hedging loss was around 70 crores. You're saying margins will rebound to around 7%, and your top line growth will be 18 to 20%. Is that correct?
Exactly.
Okay, so that's how you'll end this year. What about for the next year? What kind of projections you're looking at?
So for the next year, we have always been saying that our top line numbers, the growth will continue to be 18 to 20%. So from around 6,300 to 6,400 crores that we see, the top line numbers for this financial year, we will be aiming and endeavoring towards a 7,500 crore top line for the next financial year. And again, looking at the EBITDA numbers, we have continuously focused on having an EBITDA of anything between 7 to 8%. So that will be the numbers in terms of EBITDA. So if we bring down the PAT levels, so we will be very close to approximately 300 odd crores of PAT. These are the broad numbers for the next financial year. It is only that in this financial year, the duty cut that the government has done has its own impact in terms of the increase in growth and, to curtail the black money and the curtailing of any kind of smuggling. So it's been a great effort by the government. But yes, it has its own impact on the financials, and that is what we have seen. But we are quite confident that going forward, things will get back. And the next year we are looking very, very exciting, because if you look at the increase of diamond jewelry sales for this particular last 2–3 months, we are seeing that the diamond jewelry sales have picked up. It is growing at plus 50% year on year. If we look at the wedding season, we have a large number of weddings till April. So in terms of top line, we do not see anything. The stud ratio, which has taken an impact because of the lower diamond jewelry sale in H1, from Q3 and Q4 onwards, we have seen that. Again, the stud ratio is getting back to normal towards 11–11.5%.
So next year, 7,500 crores, margins at approximately 7.5 to 8%, and net profit you're looking at is around 300 crores. Did we get all those three numbers correct?
Yes, exactly.
And studded sales will stabilize around 10–11%, or will it go higher?
No, it will be around 11–11.5%.
All right. As per your calculations, what kind of market share do you have, and are you gaining market share?
So market share is a number that is not very clear. All we can say is that, we are seeing a steady shift from the unorganized to organized segment. And, our strength and our expansion, our growth is a combination of growth, what we see in Eastern India and Northern India. In terms of number of stores, every year we intend to open 18 to 20 stores, and we will continue to open 18 to 20 stores, around 8 to 10 company-owned, company-operated, and 10 odd franchisees. penetrating into the tier 2, 3, 4 towns and cities. We are seeing that the growth that we are seeing in urban cities as well as the smaller towns is all happening at the range of 19 to 20%. So that is a very good signal that the shift from unorganized to organized is happening. And with the growth of organized sector, we will continue to ride the wave and move forward.
All right. What's the message you would like to give your shareholders, Mr. Sen? You're making very, very big projections, but your stock is down close to around 18%. Your investors clearly are very, very nervous after looking at these numbers. You've clarified on the call. You're clarifying here on the channel as well. What's the message you'd like to give them out? I think the stock has corrected more than 30% in a matter of 2 months or so.
Oh, the Q3 is usually a quarter where we have seen the best performance for the jewelry sector. And in terms of top line, once again, we have seen a great performance in Q3. But, if you look at Q1 and Q2, you will see that the profits, the EBITDA, the growth that we have seen compared to previous year has been higher. And it is a fact, and we are all aware that the duty impact will be there. We are aware that the price movements in gold has its own challenges, and that has going to impact on hedging. So yes, the investors have been on an expectation that Q3 usually has been a great quarter for top line as well as bottom line. But because of the great Q1 and Q2 in terms of bottom line, Q3 is normalizing it, and Q4 onwards will get back to normal. I think it's the kind of expectations and the numbers that have come against the Q3 expectations is what is making the investors feeling a little jittery. But once again, we would have to see the 9-month number. We do not see just a Q3. We see the overall 9 months, and there we will see the adjusted EBITDA is at 6% vis-a-vis a 7% in the previous year. So we are just down by 1% in adjusted EBITDA, which we are confident in Q4 we will move towards 7% once again.
All right, Mr. Sen, thanks a lot for joining in and taking all our questions. For the time being, the stock is under pressure. You're guiding for better times ahead. But for the time being, the street is taking note of the past quarter's numbers, which explains why the stock is down close to around 18%.